Chip, it's great to see you again. How are you doing?
Hey, I'm great, Becca. How are you doing? You
Uh,
staying warm this summer?
yeah, it is quite hot, actually, which is quite unusual. But you have brought your entire valuations team with you from Rehmann, and it's very lovely to see you all. So, how are you?
Uh, Doing great,
Wow.
Becca. How are you?
Great.
Good. No,
Good, thank you.
it's
Yeah, this
great to
is
see you.
this is sort of my idea where I'm trying to recognize that I may not look very good on my own, but if I surround myself with enough really smart people, I will somehow look smart too.
Chip, isn't that what we all do?
That's
So,
exactly right. You got a smart group. I'm with you, Chip. The rest of them make me look good. So,
Far,
so can you introduce
far
me to
from
them
it.
all? Can you introduce me to them all, Chip, please?
Yeah, let me sort of go around the table. We have Gus, who is currently in our Orlando office, but soon to open our Salt Lake City office as he is getting ready for a new adventure out there. He's a senior with the group. Um, got a lot of avid outdoor activities, which he enjoys, which will be, I think, a little more picturesque in Utah than Florida. Not so much Everglades, a little more mountains coming up soon. Um,
Exactly.
yep. Alexandra is our Southeast Michigan representative. She'll tell you more about herself, but some of the most interesting stories she can't tell anyone along the
They're
way. She's
always
a
the best.
manager with the group.
That's good. Well, you can tell me because honestly, this is all secret. No one will ever see this video.
she could tell us, but then she'd have to kill us, and that's the problem.
That's the investigative services side of the thing. We're
Oh,
not
that's
bringing them
right.
in today. Yep, they're the ones that take care of that. Uh, Mr. Kevin Dooley, who is a boomerang, was with was with Vestal and came back as the firm came in with Raymond in Orlando. Again, a manager with us, a relatively new father, and so enjoying all of the new things that come along with that.
Oh,
Um,
it's nice.
Slijano, one of the co-directors of the group, also based out of Orlando. She had the opportunity to go from Chicago down into Orlando during COVID. So lots of interesting things going on with that, and that's a story she can tell. And then our other co-director, John Waybright, another boomerang who left Vestal and came back to Raymond. John's got a wide variety of great experiences in valuation, also serves as what I like to call a transactional services concierge, more than just a transactional guy, but someone who actually really guides people through the whole transactional services thing from stem to stern.
So, Chip, what is business valuation?
So I'm going to talk about it from my relatively unlearned position. I'll let the experts weigh in, but I always think about valuation as and business valuation specifically as a couple of categories of what it is and one category that it's not. It's not an appraisal service. It's not a real estate appraisal. It's not a appraisal of a piece of equipment. It's something that actually looks at the value of an operation and says, what can we sell this operation for? The pieces and parts are discrete and they may have value, but that's a different category. What the valuation folks really do is they serve on what I like to call the routine functions where there are requirements for evaluation to be done. That can be for various tax authorities in the estate planning world, gift and estate tax returns, for
Right. Yeah.
example. It can be as part of an ESOP where the plan makes it be revalued. It can be part of a shareholder agreement where every year there's some sort of an out clause for shareholders that's revalued, and any number of things. But they're not confrontational, they're not contentious, they're just routine things. And then there's the things that are contentious, that are not routine. They typically involve someone being sure someone did something to someone and needing damages figured out. It could be as simple as just business interruption valuations like in a hurricane or a fire, or it can be all sorts of much more spicy things like that. Some of the things that Alex can't talk about are, celebrity divorces and high net wealth individual divorce type situations that she's gotten into earlier in her career. But that's the way that I sort of bifurcate those couple of things, and our team covers that whole universe of routine to a lot less than routine.
That's great. That's really helpful. And what I'd really like to talk about is some of the clients and the type of people that you work with. So, John, I know that you do the routine valuation work. So, when you think about that kind of work, who are the types of people that you're helping, the type of thing that you're helping them with?
Absolutely. Yeah, we work primarily with what we consider small and middle market businesses in a variety of industries. We're fairly industry agnostic with a couple of exceptions. And most of the time, they are the routine, the estate and gift. They want to give to their heirs, and or they might be, how much is my business worth? If I'm looking at a succession plan and my kids don't want it, so what would it be worth if I sell on the market? And one thing I try and do is tell them we're trying to simulate the stock market is valuing companies on a daily basis. What we're trying to do is simulate the value of their company or the value of their business because they don't have an active publicly traded stock. So we're going through an analysis to determine what their business might be worth as a whole, or there might be some fractional interest in what that might be worth. So we're going through an entire process as we look at that business and analyze their potential, and it's very much a forward-looking exercise.
And do you find it that people are really cooperative in doing that, or is it quite a difficult thing to do? I can imagine people often don't have the right paperwork and things in place. Or
it is cooperative most of the time. There are certainly others, that have better records than others, and have better finance internal departments. But most of the ones that are for the routine items, it's a fairly straightforward process. As Chip mentioned, there are some that are a little more contentious, shareholder freeze-outs, divorce, and disputes. And sometimes we're working on the side that doesn't have as much access to the records as the other party might. And those are the ones that take us are a little bit harder to get to completion, to thoroughly analyze the business, as well as it is already a contentious situation to start with.
Yeah. And you do concierge services as well, transactional concierge services, which sounds really glamorous. And I've kind of, I've got you in the front of some slick office in the front of hotels. So tell me, is that
5-star?
What exactly is it? What is it?
Yeah. So we do a lot of transaction work throughout the firm, not just in our group. We get involved with a lot of baby boomers who are trying to sell their businesses.
Right.
And the concierge that Chip mentioned, most of what I do directly when I'm in the details, we call it financial due diligence, where we're doing work for either the buy side or the sell side. But there are a lot of other things in the transaction that need addressed, from tax planning to potentially wealth management if they have a liquidity event coming, to dealing with, if we're on the sell side, to dealing with the buy side's due diligence team, to dealing with the investment bankers. And also, there are certainly things in the transactions that are always negotiated, and helping our clients through that process and what that looks like, and trying to get the best result for them. Our main goal is to help all of our clients achieve their goals. And that's what we focus on, whether it's valuation or whether we're specifically involved in a transaction or any other item.
And it must be quite stressful for your clients, actually. I think even when it's non-contentious, transactions, I think, are quite stressful things, particularly when you want to achieve a result and it's not guaranteed. How do you work with people who are feeling stressed?
It is, the stress of, is the transaction going to close? And that's even on the buy side sometimes, or the investment bankers, some of the other advisors, they're feeling the stress of getting the transaction closed. And it is an emotional event. Our client may have been in the business, may have founded it and worked in it for 30, 35 years. And so now they're kind of giving up their baby, so to speak. And so it is part of what we do is just coaching them through that. And I've actually talked to clients about, are you prepared really financially? This is going to be good, but are you really prepared for not going to the office every day? Or maybe you've got a 2-year consulting agreement, but they're really going to only use you for about the first 6 months. And after that's over, what are you going to do with your time? And that's the part that's not financially driven, because ultimately we want them to be happy. And there are many of them have thought about it, but they really don't know what it's going to be like, myself included. When I finally retire, what am I going to do with my time? There's only so much golf and tennis I can play. So what am I going to do with the rest of my time? And we've actually had conversations like that. And I've had conversations where the parents thought the children wanted to take over the business, and one of them was running it really well, but he finally came clean and told the mom and dad, I don't want to run this company. That's not what I see myself doing for the rest of my life. And then, it was a very emotional meeting. And then you've got to deal with, a totally shift or change in plans from what the parents thought was going to happen to what they now need to do.
So really the transactional part's almost a smaller part than the emotional support and the advice and guiding that client through that process. So you're giving them an awful lot of support, aren't you, as people?
Yes, and most of it is the financial and structuring the transaction to get them the best benefit possible. But there are other things that our clients, we want them to consider if they haven't really thought about it in detail. Many have, but there are a few that haven't.
Yeah,
no, I think something that's interesting too with the emotional side is they're so tied to their business and in the day to day that. With John being, that third party viewpoint and having gone through many transactions where most business owners maybe haven't gone through transactions, it can get difficult. Each side will ask questions and they'll pick at things that might hit a touchy subject for the business owner. And it's important to be able to take a step back and provide a response that isn't emotionally tied.
Yeah, and has that neutrality and can think clearly for your client. Yeah, that's really important. So John, sorry, Machit.
I was going to say, just to finish that off, I think perhaps we changed John's title to transactional concierge and purveyor of client happiness.
There we go. I like it.
Really had it.
I love it. Yeah,
I like it.
I think that's perfect.
And as Kevin pointed out, a lot of them in a transaction, they're going to do a deep dive, the buy side, if our client's selling, and they may have their business looked at in a way that they're not used to, even in a financial statement audit. And they're going to really be looking under the hood at certain areas that they consider risky, and just preparing a client for what's coming, and because they haven't had to really answer those questions or haven't anybody look at their business in that manner. And that's it is new to them, as Kevin mentioned. So we've got to guide them through that process.
Yeah, and Sledgehammer, that must be even more relevant for your area where you're dealing with contentious transactions, because it must be quite emotional when people are criticizing because you're batting backwards and forwards, and it's almost like a divorce, isn't it? Where you sort of people are saying things they perhaps take quite personally, and it can cause people to get quite inflamed and stressed. And how do you deal with all that?
Oh, slowly but surely, that's for certain. I'd say if anything, we might come across that on my end, because I don't really get involved too much in the transactional work that John thankfully does. But we occasionally do come across that, let's say if it's a shareholder dispute where, they're trying to determine the value of the business for a buyout of one of the shareholders that's looking to exit. And, one shareholder is the selling shareholder, the one that's looking to be bought out, occasionally is presenting that it's pie in the sky, it's hockey stick projections, the outlook is fabulous, whereas the shareholder that's potentially redeeming or buying those shares is doom and gloom. It's where we have so much customer concentration. There could be an acquisition of a customer that the projections are very pessimistic. So it's a matter of delicately, looking at listening to both shareholders, or both parties, and understanding really, truly what's driving it, and try to maybe come to a middle ground and be as neutral as you can, because it's an independent opinion of value, but we do have to consider both aspects.
Right, that's really interesting that you see it as very much the independent valuation. So can you explain that a bit more for people? So you're doing it as a neutral party?
Yes, no, it's an independent opinion of value. So that's really for, kind of some of the projects that John mentioned where we're brought in for a gift and estate tax valuation, where we're that independent expert that our valuation report, our opinion gets attached to that tax report, that the tax return for the filing. And so we're independent. We should not consider any biases. It should just be based on the facts and circumstances as of the valuation date, corroborated by industry metrics, looking at market multiples or what have you. But it's always an independent opinion of value. So even, for example, sometimes on the financial reporting side, where it's somewhat of our routine projects as well, types of services that we do perform. But let's say company A is acquired, and for their financial reporting purposes, they need to have a purchase price allocation performed, which in essence is used for their financial reporting to determine what their opening balance sheet looks like. So we come in and value the intangible assets that were acquired. So it's then, while the client may be able to perform it, they might not necessarily have even the expertise to perform it internally. So that's where we're brought in based on our experience and our independence. And then we're also then responding to our auditor or to their auditor's questions. And they're assessing the reasonableness of our assumptions and our methodologies. So, we're again that independent opinion of value for, be it for a business valuation or financial reporting related valuation, or even like an impairment analysis. Again, it's stepping back and we're being impartial, where, let's say a company might be underperforming, they have some goodwill on their books. Obviously, if they're going to perform the valuation, they're going to say the goodwill is not impaired. But if we really step back and understand their cash flow projections, understand where the market is, where the industry is, we might come up with a slightly different answer, and there might be a potential impact.
Yeah, I can see that. And also, it sounds to me that you're acting like a buffer for those people in terms of dealing with those questions, and actually taking away a lot of the stress by doing that all for them, aren't you? Is that right?
We are. Yes, absolutely. Again, that's part of, what we're brought in to do, and, alleviate that portion of that exercise, let's say on the financial reporting side, while we rely on them to provide some of the information we need to perform our analyses. But when it comes to the questions that the auditors come back with, usually it's on the valuation methodologies and the key assumptions. So we're there to answer any and all questions that they may have.
But that means me as the business owner, I can sit there drinking my coffee and let you get on with it, and I don't have to worry about it. Well, not so much. I haven't got to answer them. So always better. So Chip, I mean, you've got this great team. What makes them such a fantastic team to work with?
So I think you can see, how they work together. One of the things that I was thinking about, as part of it is just the knowledgeability of all of them. It made me think as they're chatting, I wonder if folks know what kind of materials need to be gathered for evaluation. I didn't know if Kevin could comment on what's the kind of information that someone has to provide for you. What are the must-haves, and what can you live without in those contentious situations, and what do you do if you don't get everything you want?
Yeah, so typically we try to look at at least a 5-year historical period to kind of capture a business cycle. Obviously, every business is different, and each industry can be different as far as the business cycle goes. But what we're trying to do is paint the picture of the past to be able to look into the future. And so with that, then we typically ask management to provide us with projections. And what we're really trying to do there is be able to bridge that gap between what's happened in the past and what's going to happen in the future, and what assumptions were made to be able to achieve either maybe it's successes, or it could possibly be a decline, given the current environment that we're in. There's been so much volatility in the marketplace with supply chain, and some industries have boomed, some industries have been hit harder than others. So it's really trying to wrap our arms around what's happened in the past, what's it gonna look like in the future. And then the other things that we typically look for is if, because we're looking at small to medium-sized companies, these business owners might take compensation in excess of the marketplace, or there might be personal expenditures ran through a company that maybe from a market perspective wouldn't be in the normal course of business. So it's just kind of what Sajana hit on with that independent viewpoint is we take a step back and look at it from a market perspective. It's easy for the business owner to continue doing what they're doing because it's fueling their life. It's what happens with them on a day-to-day basis. They just get caught up in it. And then obviously we look at operating agreements, shareholder agreements to see what the language is around just the basis of the company, things like that.
So it's a very collaborative experience, that whole valuation process, isn't it?
I think it's a great learning experience too for clients because they really see what the drivers of the value are, where again, they're so caught up in the day-to-day that they probably don't take that step back and really think about the decisions that are going on a day-to-day basis. So that's the part that I enjoy the most is really saying, hey, look at what you might think the value is and look at what we get the value at and kind of, show them this is the steps that we took to show what the market would value your company at. It could be good, it could be bad.
Do you often find that people have thought about building value into their business, or is it something that they only suddenly start thinking about right at the end when they're looking to sell?
We see both. There's business owners that are really active in what they're doing, and then there's business owners that are, on the sideline just reaping the cash, and that's okay too. I think it just depends on the type of the business owner and what they're really looking to achieve. Some people are just content with what they have, and then some people, are out there to really grow it and look in the marketplace to maybe acquire additional businesses or grow their business, sell to PE. There's so much going on in the marketplace that I think everyone, it just depends on what their goals are.
Yeah, so I suppose if your long-term goal was to build value into a business, actually getting advice earlier rather than later would be a good thing, surely.
Absolutely, it'll never hurt.
Yeah, and so that you can actually have a long-term plan to building value and work with you at building that. So Gus, you're the youngest on the team, I think, aren't you? Am I right? So tell me about the work that you do, and do you enjoy it? Are you sort of finding it really challenging and exciting?
So I definitely enjoy it a lot. So pretty much what I'm doing is I'm collecting all the data, historical financial statements, inputting balance sheet information, income statement information, and then depending upon how good the client's information they give us on a discounted cash flow basis, I'll input those. I'll come up with questions to talk about with Kevin and Alex, Jonna and John, and see what we think we need to ask them, what maybe they could give us something a little bit better on. And then I'll also look at guideline public companies and transactions. So for instance, if we're valuing a car dealership, I'll look at other similar car dealerships in that area and size and see like what they're getting for value, EBITDA multiples, things of that nature. But overall, I'm very happy with the work I'm doing and the people I'm working with.
That's really nice. It's nice to have such a rounded team, actually, of the people that can learn from each other. It's good. So Alex, I haven't forgotten you. So I'm going to ask you questions now. So I know you worked in California and you did some quite interesting things there. So I'm on a fishing trip for you to tell me some bits and bobs about what you did while you were in California, and also how that work prepared you for coming to Rehmann and what you've taken from California.
Yeah, so I'm definitely a Michigander at heart. But moving out there was a lot of fun. It was something that my husband and I wanted to do when we were young and didn't have a family. So I worked at a CPA firm out there that specifically works on high net worth divorce cases, technically called forensic accounting. So my experience is entirely in the contentious world. And so there was a lot of disputes over multiple different areas, income and property division, support. So only financially focused, thank God. No child custody issues, anything like that. But most of the times people in California especially were wealthy because of businesses that they owned. And so when there's a family that has that type of dissolution going on, there has to be a determination of what that business is worth. So that's what ultimately led me back to Raymond and finding my home here.
Oh, that's great. So, I mean, you're talking Johnny Depp. Like, I'm not not that I'm trying to guess.
We'll never know.
She's not going to say. Oh well, it was worth a go. It was worth a go.
I wouldn't be following my ethics if I were to share that. So.
Do you have those in the US? No, I'm kidding.
Listen, I'm sure Becca's going to spend all weekend now going through the footage of that trial, looking for Alex
looking
in the background.
Yeah.
She's there, but we can't tell you where.
All right. Well, I'm going to ask you a difficult question that is one that I come across quite often, and that is with a lot of firms. You meet the partner, or as we have here, or directors, or whatever, and then when it actually comes to the job, you basically send out Gus on his own and without any support as the sort of youngest member of the team. And we see that a lot in the UK and and in other countries. I know it happens in Germany and things as well. Is that something that you guys would do, is leave Gus on his own to cope with something while, when you've done all the selling as the more senior people, and then leave Gus to do it all on his own?
So before anyone answers, back in the day when I first started, we called those curb jobs. And if you were a good manager, you slowed down before you shoved the staff out the car door. If you weren't, you just went by at 55 miles an hour and shoved Gus out.
Good luck.
Well, I'll take that. There is not an engagement that we work on where we do not have, or where a Gus or anybody's on their own. Every single engagement we do, it is a team approach, not necessarily all 5 of us. But every report that goes out is reviewed by both Slajana and myself as well. So one is signing off on the engagement, and say Slajana has worked with Gus and or Kevin or Alex on an engagement. So they've done most of the work. And then I come in to do a concurring review from somebody who hasn't been in all the details, but just reviewing the engagement at the end. And we do, when I say at the end, we actually look at the models. We get together on the value before we write the report, and then the report gets reviewed as well. And on other engagements, that role might get reversed, where I'm the person that's in more of the details with Alex or Gus or Kevin, and then Slajana is doing that review where she's coming in just looking at the models as we've completed them and the report. So everything is a team approach. There's not a single thing that is done without at least a second review and a consensus on, did we get the right value? Because valuation, there's a reasonable range of value, and we have to stay within that, and assumptions, and somebody else can come in and tweak an assumption here or there and come up with something slightly different, but it still has to be reasonable, has to be defensible. And as Slajana mentioned, and we often talk with attorneys, they get to advocate for their clients. We have to advocate for our opinion. So we are independent on that. So and that's how we approach all those.
I remember my first.
Go ahead, Kevin.
My first day in public accounting. So prior to working in valuation, I was in the audit department. And I remember the very first day I showed up, they said, "Okay, go ahead and audit cash." And I'm at the client. I'm like, "What does that even mean?" Like, what do I do from it? and then it's so much different in the audit space, where you're interacting with the CFO face to face pretty early on. I would say, like, within the first 2 engagements, you're probably interacting with the CFO or the business owner. Whereas here, I like to think of us as value-added service, not saying that audit isn't value-added service, but I think audits are usually determined because they have a bank that's requiring an audit or some sort of debt lender. Whereas us, I like to think that we get hired because we're going to bring value to the client. And so we really want to make sure that we're delivering that value. So we work collaboratively as a team. We run things up and down the food chain both ways before we go to the client. We want to make sure we dotted all our T's and crossed or dotted our I's and crossed our T's
I know what you mean.
before we go to them.
No, I mean, these are all quality things, aren't they? Everything you talked about is quality, sort of not leaving younger staff members on their own, working collaboratively as a team, looking at things together, making sure everything's double checked. So, Sljana, are there any other things you do to ensure quality for the client?
Really, John already touched upon it, that we do have the concurring review, but I think that, kind of even touching on what Kevin even mentioned, we're very collaborative, that we're not letting Gus or any other junior member out on their own for any prolonged period. We're in there in the models, working collaboratively, let's say identifying industry SIC codes, or walking through the financial statement trends, so that we can have really productive discussions with our clients. So and that's the thing, I think back to my career when I started, oh my gosh, a long, long time ago, was I really enjoyed the collaborative nature and working through the models, the valuations, understanding, asking my questions along the way, and having that open door policy. And I think we try to do that as well here. But we're a resource, and eventually we're hoping that this team will be in place and take over once John and I have retired, whenever that might be. But we're developing that team so that they're educated, they're very experienced and knowledgeable, so that eventually they'll be able to manage from start to finish and execute and sign on any type of an opinion that comes our way. So, but we're very mindful of quality and concurring reviews, and just not taking the time that's necessary to issue an opinion, a value that is independent and really meets our clients' needs.
And that good team as well ensures, and the succession that you've planned with the team being a good age range, means that you get consistency. So everybody knows they're going to get a consistent service over time, and it's not all dependent on one person, because everybody's trained in the same way, aren't they? No, that's great. Chip, is there anything else you want to add at this point?
So, a quick case study. If you were going to value Becca's business, what questions would you ask her right now?
Let's see. Well, without having seen your financials, we'd start with, do you have any business plans? What are you looking to achieve in the next 3 to 5 years?
Okay, I'm doing well. I can do that so far.
Both on the top line and the cost side, because we're ultimately looking at net cash flow type items, and what do those plans look like? And then, assuming we have the historical financials, which we are also going to get, but we need to, as it's been brought up previously, is bridge the gap. So your business has been trending along like this for the last 5 years, and now you believe that you're going to do that times whatever. And so to walk us through how you're going to get there. And maybe you'll go through, you've got, brought on new customers and some different things. The other thing we'll quite honestly is talk about the risk in your business, the risk and opportunities. What about the loss of a key customer if you have one? What's your customer concentration look like, and what are you looking at doing geographically can come up depending on the business. We have some that are working in very small areas, just a certain metro area. We have other businesses that are in almost every state, and even doing some international work. So those, obviously you're doing some international work, you're working with us, so we could walk through those type of things. So, and it really ranges from the different companies. When we're working with, we do also work with, which we haven't mentioned, a lot of private equity owned businesses, right? And they have, so you've got management and the private equity group both chiming in and what their goals and objectives are. So those might be some of the initial questions without having any of your data in front of us to talk about.
I think it would be interesting too how COVID has impacted your business, because this digital platform has just taken off really in the last 3 years since that hit. And do you see it being sustainable? What's kind of the clientele mixture looking like? Is it still that digital running strong, or are people, I don't know if you do conferences or anything like that, but what does that look like going forward?
So it's really helping people think about their business plan, isn't it? And looking at all the different aspects of their business, which really they should be doing anyway, but they probably, people aren't always perfect and they don't always consider all those bits, do they? And one of the bits that I find really interesting, which you mentioned, was multiples for sale. And my own experience talking to other sort of business people is that they don't realize what those multiples can look like, and therefore they're not making those plans ahead. So what would be your top tips, Snejana, if you were going to help somebody think about getting a good value for their business in the future?
So it's really trying to, that's a great question, really trying to understand what your cash flows truly are going up, where they were historically. Are there any non-recurring one-time type expenses that perhaps, let's say if you're looking to sell, if the buyer performs any type of quality of earnings, that they may identify those so that you know upfront that, you know, if it's, let's say, a multiple of cash flow, that if there is, let's say, $100,000 one-time non-recurring expense, you're capturing that in your earnings. You're going to apply, let's say, a 5 times multiple to it. All of a sudden, you've lost 500,000 in value. So you're just being mindful of, you know, understanding if there are any non-recurring. But again, kind of going back to those future expectations. It's like any prospectus that we pick up, it's always indicating that the history is not indicative of the future, but, you know, just being mindful of, you know, understanding what your plan and outlook will look like. And, you know, understanding kind of what John, I think, alluded to earlier was, you know, you might show some growth, but, you know, from an investor's perspective, it's being able to explain and articulate how you're going to achieve that, let's say, exponential growth. Is it going to be organic? Is it going to be through potentially acquisition? It's just being mindful and understanding and articulating how you're going to get there.
The other thing too is if you're thinking into the future, I think it's beneficial to start getting either, you know, compiled, reviewed, audited financials, because that helps clean up sort of some of that messiness that can be occurring in smaller to medium type businesses. So that's at least, it gives some more meaning to the financials than just internal financials that the company prepares.
Yeah. And really the process, I mean, we certainly have clients who get approached and they weren't thinking about selling, or they decide they might want to have some type of succession event and are certainly able to accomplish it with this in a 6-month window. But generally speaking, as we mentioned before, the earlier you start, the better. So, you know, if you're thinking about selling 5 years out, really the time to start planning is now, to kind of put the curb appeal on your house, make sure you've got the right management team in place, because that makes a difference. Make sure your systems are, you know, are tight, your operations. So John mentioned, you're managing your cash flow, not just the income statement side, but for example, if you're a manufacturer, that your working capital management is efficient, because all these are looked at by the buyers, and the risks that you have in your business. If you have risk, a key customer that makes up 25% of your revenue, how are you going to mitigate that risk going forward? And you know, one, by, you know, possibly additional customer expansion, or maybe you have that customer in a long-term contract that they can't get out of, so that helps mitigate risk, versus a customer who can leave you at any given time. So.
Yeah. What about you, Gus? Have you got any thoughts about that?
I'm definitely just kind of going off of what Kevin, Sanjana, and John said, just being prepared for the future and knowing, yeah, I'm going to be selling in the next 5-10 years, talking to us early if possible, and seeing what things add value to the business, what things can you do better, what things can you get rid of, and really just creating a plan. And don't be afraid to ask questions, even if you think it might be something that you should know or shouldn't know. We're going to be happy to help and want the best for you guys.
So do you think, because we mentioned before about digitization and using the platforms, if a company has got a good digital plan in place, Do you think that adds more value than one that doesn't?
I think it depends on the mixture and the industry, but I also think that it's already starting to change. I mean, look, Zoom's making their own employees go back to the office. So, and we're on Zoom. So I think it's weird. I think people do miss that interaction, that face to face. I think there really is something to say about the relationship side of things that we've seemed to really just thrown out the window in the last 3 years. It's like people forgot how to communicate with one another and care for each other. Um, but I still do believe that that is going to be a way of the future. It's just maybe not going to be exactly how it's been in the last 3 years, but it'll be some form of that.
Yeah, and we know AI is coming, and more businesses are going to adopt AI, and depending on how you want to define it, many are already using AI in certain ways and shapes and forms. For example, on the transaction side, this has nothing necessarily to do with digital growth, but do you have a good cybersecurity plan in place? That comes up sometimes when we're doing transaction work, because that's a risk. That's not a growth opportunity. It's a risk to your business. And it's not done within our group, but for example, we can do cybersecurity risk assessments within Rehmann and help our clients with that. And that might be something we get into in a transaction, talking to somebody for the buyer. If we're on the buy side, would you like us to do a cybersecurity assessment? Because the last thing they want to do is walk into a business that 6 months later gets hit with ransomware, and now your systems are down, and it's going to cost you $1 million plus to get your data back, and then you might not be able to get cyber insurance after that.
Absolutely. So if I come along with all my information, because I'm super organized and I've been a really good girl and I've listened to Chip and I've done everything he's told me to do over the years, and how long is it going to take you to do my valuation for me? How long do you reckon? A couple of weeks?
I'll take it.
I was going to say,
it really I'd say it depends, but for the most part, we try to turn things between 4 to 6 weeks, but obviously it depends on the workflow and how many projects we have, but that's what we shoot for, and that's what we hope to deliver.
And I mean, obviously every business is a bit different size.
Yeah, some are messier than others, so it's circumstantial, but we try that 4 to 6 week mark is I would say the norm.
No, that's great.
And certainly if a client has a real need, we'll plan around it to the extent we can and turn it in 3 to 4 if needed.
Yeah.
So and we do that, but we try and make sure that we can meet all of our clients' goals and expectations. But we also realize if they're just coming to us and we do have a pipeline where we've promised other people different things, then we have to take that into account before we just say, we'll drop that and work on their data.
So Gus, should we start with you? So you have spent some time in Tallahassee. Now, if I'm right, wasn't that in The Office? Because the US version of The Office, didn't they go there in Florida? I just remember watching episodes with the kids over and over again, and I'm sure it was Tallahassee. I was like, oh yeah.
In his days as a paper salesman.
Yes, they did.
Yeah, yes. I thought it
Good
was
Tallahassee.
Yeah.
Yeah, I didn't realize that.
Yeah, I've had to watch that through, I think, 7 times now with my kids. So, and actually I'm surprised my kids haven't been in touch with you lot, because they go around the house putting post-its on everything going, this is mine, this is mine, this is mine when you die. It's like, thanks guys. So kind.
That's funny.
Right, so come on Gus, tell me all about you.
Yes, I am Gus Rubito. I'm a senior in Raymond's consulting department, and I focus on valuation services and M&A due diligence, and I'm currently in the Orlando office. But prior to joining Rehmann in October of 2022, I started my career at RSM as an audit associate, and I worked on publicly traded and privately held companies. And when I was at RSM, I was working on a variety of industries: manufacturing, agriculture, consumer goods, food and beverage. And these companies typically range in size from anywhere from 10 million to over $300 million in revenue. But I realized that assurance wasn't my true calling. And I had the opportunity to join Raymond and work on valuation and due diligence projects. Since joining Raymond, I've found that our values really align and the firm stands true to its culture and values. And due to that, the transition to Raymond has been a seamless one for me. And a little fun fact is I'll be soon moving to Salt Lake City in about a month. And I'm planning on taking advantage of all the abundant outdoor activities that Utah has to offer. And outside of work, I really enjoy spending time with my family and friends, hiking, snowboarding, golfing, and other outdoor recreations.
Right, that's really good. That was super. Really, really good. Well done. Excellent.
Thanks.
Right, Kevin. Now, I'm actually slightly surprised that you are still awake if you have a baby. I'm not sure I'd be up for this so soon. How old's the baby?
He's going to be 4 months old on the 30th.
Oh, they're so
Yeah.
cute at that age.
Definitely a lifestyle adjustment, that's for sure.
Oh, yeah. It really is.
Alex would be proud of me. I got her to bed before 8 p.m. last night, so we're getting closer and closer to the 7 p.m. mark.
15
3 days in a row before 9.
Oh, well done. Well done. So tell us about you.
My name's Kevin Dooley. I'm a manager in Raymond's Valuation Services Group. I'm based out of the Orlando office. Prior to joining Raymond, I was with Vestal and Weiler CPAs who hit at which they were acquired by Raymond in November of 2022, which is ultimately when I ended up joining. However, I did take a 1-year gap and tested my luck in corporate America, and I joined a Fortune 500 company for a year in the accounting space and determined it wasn't for me. And ultimately, I made my way back here, working with Slajana, and then we eventually worked on getting John back over here too. But I think for me, joining Raymond was pretty simple. I had a lot of trust in the leaders of Vestal and Weiler, and I knew that those core values clearly had to align in order to sell to Raymond. So for me, it was an easy decision. I missed, working in the valuation space and helping assist clients with their needs. And really just, you get a lot of knowledge in a broad range of things, whereas in corporate accounting and private, it's very specific. I only knew one thing about this company, and the one thing really didn't mean a whole lot in the grand scheme of things, is what it felt like. But as you mentioned, I do have a newborn child, so that's taken up a lot of my time. But outside of that, I really enjoy traveling. I like food. I enjoy golfing as well. And yeah, that's about what I do.
That's great. Well done. That's really good. Right, Slajana. Yes. Now, what persuaded you to move from cold and windy Chicago to hot, sunny Orlando?
This opportunity with Vestal and Weiler. What can I say? They while they were interviewing me, I was also interviewing them. So it was a great fit, great group of people. So yes, my name is Slajana Voichinen, and I'm a senior manager here within Raymond's Valuation Services Group, and I'm also based out of Orlando, Florida. So I actually joined the Raymond family back in November with the acquisition of Vestal and Weiler. I was a director in their Business Advisory Services Group, still focusing on valuation there. So kind of as you alluded, the move. So my husband and I actually relocated from Chicago for the opportunity with Vestal. A little over 3 years ago, so right during the height of the COVID pandemic. So to say the least, it was a pretty wild moving, relocating during that time, but beyond grateful and for that move and that opportunity here now with Vestal and Raymond. So prior to that, I was with national and regional accounting firms in the Chicago area, again, focusing in their solely evaluation practices. And quite frankly, it's hard to believe I have over 25 years of dedicated valuation experience. It's pretty crazy.
Scary when you think like that, isn't
yes,
it?
It is. It is. So in terms of the types of projects I work on, pretty much you name it, I probably touched it. A lot of financial reporting related valuations for ASC 805, purchase price allocations, some intangible asset valuations, some goodwill impairment testing. On the more traditional BV side, we kind of touched upon a lot of those, but a lot of estate and gift tax valuations, shareholder planning, buy-sell purposes, We also are occasionally brought in on some of the tax-related valuations for C to S Corp conversions, for corporate planning, recaps. Again, pretty much you name it, we've likely touched it over our careers. I do want to add the one thing that I'd say, I think with the years of experience is I've learned that valuation is so much more than an art than a science to me, especially. It's like I truly enjoy spending time with our clients, learning about their challenges, learning, how they got to where they're at today and, understanding really what their expectations are going forward and ultimately translating that into value, which, again, could be a surprise to them, upside or downside. But again, just spending that time with them and learning about their business, I truly enjoy. So outside of work, I enjoy spending time with my husband, traveling and exploring our new home state of Florida and everything that the Sunshine State does have to offer. Starting to follow some of the Florida sports teams, but I'm still a huge Chicago Cubs and Blackhawks fan.
Excellent. Well,
you left the Bears out.
Comes back.
Well, I did leave the Bears out. I can't say I followed the Bears as regularly as much as I do the Cubs and the Blackhawks.
Okay.
Excellent. That's great. That's really good. Thank you. Right, Alex, do you want to have a go?
Yeah. Hi, I'm Alexandra Budnitsky, and I'm a manager in Rehmann's Valuation Department, and I'm also a proud member of our Troy office. I started off my public accounting career as an auditor at a large regional firm before I discovered that my true path into this world was valuation. My valuation career began in no place other than Los Angeles. There, I worked at one of California's top family law forensic accounting firms. Super interesting work. I, was a CPA working on high net worth divorce cases alongside the state's best attorneys. I honestly never knew that a CPA could do this type of work. I didn't know it existed. And so it was just an awesome 5 years out there. But eventually, family and COVID led my husband and I back to Southeast Michigan. Fate had then connected me back with an old family friend and a current partner at Rehmann. I was looking for my forever home here in Southeast Michigan, and learning about the firm's culture and values made it just an obvious no-brainer that I wanted to be here for the long haul. I'm so lucky to call Rehmann my new home. And also, just like Kevin, when I'm not working on a valuation model and deep into Excel, I'm probably chasing after my 1-year-old who's currently upstairs licking my refrigerator, moving my hamper into the shower, throwing peanut butter on my ceiling. It's just never ending. Or I'm, after bedtime, I'm baking something in my kitchen or getting a sweat on my Peloton just to keep myself sane.
Oh, you got Peloton. I looked at those during COVID.
It's awesome.
Yeah.
It's awesome.
That's brilliant. Thank you. That was really good. Right. Last but not least, John hiding at the top of my screen there.
There you go. Hi, I'm John Waybright. I'm a principal in the valuation group at Rehmann, and I'm based out of the Orlando office as well. I've spent about 35 years now in accounting. I started really early, obviously, a very young age, but I've got 35 years of experience, and 29 of it has been in CPA firms doing audit and accounting management and financial consulting. And I also spent 6 years on the corporate side of the fence, so I do understand, what the CFOs and those people are going through. And I spent most of my time there doing financial reporting, cost accounting, and financial planning and analysis. I used to live in Columbus, Ohio, but then I moved to Florida in 2017. That's when I joined Vestal and Weiler. And I was there for 5.5 years. And I actually my wife and I wanted to move to South Carolina. So we did make that move. And as they've mentioned, I was gone for about 6 months, but decided I did not like the firm near as well as I liked my team. So I gave Rehmann a call and came back to the team doing what I'd done and working with the team. And that's why I boomeranged back, because I really enjoyed my colleagues at work, as well as the clients and the issues we worked on. It's where I want to focus on. I think Slajana's covered all the valuation focus quite well. What we do, financial reporting, estate and gift, litigation support, buy, sell. We do basically a complete range of valuation work. And outside of work, I really just enjoy spending time with my wife, my kids. All of our kids are grown, and we have a dog. We love spending time with him as well. I play golf and tennis, and my wife and I like to travel. We'll go out to the West Coast and go to Napa and taste wines, and we also like going to sporting events, both at the collegiate and the professional level. The TCJA that was passed in 2017 under the Trump administration took effect in January of 2018. Changed the gift tax and the state rules, and a lot of the thresholds on what's called the unified credit for gifting to your children and what's taxable in your state. And that applies to both spouses if it's a married couple. And all of those rules are set to sunset based on that legislation in 2025. And what that means is that there's a lot of people out there that are high net worth that may have not used all their gift exclusion if they want to transfer value to their heirs. And what they need to do is make sure they do that before the rule changes. The number is about 13 million per individual now, so 26 million per couple. And they can gift at discounted rates. Typically, when we do valuations and they gift minority interest, we're taking discounts off the pro rata value of the shares. So they can get more value to their heirs or trust, or however they're doing their planning, and by doing that. And they need to do it by 2025, because most people believe, we don't have a crystal ball with what's coming up with the next election and the administration, but most people believe that the exclusion is going to go back to at least 5 million, back from 13 million to 5 million.
That's great. It's good. We can cut that.
There's awesome. A lot of value for the couple. You're looking at 10 million versus 26 now. There's a lot of
that's a lot of money saved.
Yeah, there's a lot of money, and the estate tax rate is very high. Once it kicks in.
No, that's great.
45%, if I'm not mistaken.
Yeah, and we have people at the firm that focus on all the estate and gift planning in our tax group, and we work in conjunction with them on these very issues that we're talking about. So we're expecting a very busy second half of 2024 based on what's going to happen.
Excellent. If somebody wants to get in touch with you, how would they get in touch with you to talk about that?
We all have, you can do our direct dial in Orlando, or our main dial is 407-843-4433. We all have direct lines as well. But I would say they could talk to whoever their advisor is at the Rehmann Group, whoever their main contact is, whether it's audit or tax or one of our other groups, and just bring that up, and we will get the right people involved, because the entire planning process includes valuation. It includes our tax people. If they have a separate legal counsel that's doing some of the trust and the gift work, that's a team effort to make sure that the plan is executed properly.
Good. No, that's great.
And wealth management people are normally involved in that process as well. We have a great wealth management group, and a lot of people in that group are very versed in what's happening with the estate laws, estate tax.